Mukesh Bhutani is with us, Vipin Sodhi is with us also, and Amrish Baliga. Let me just quickly touch in first with you, Amrish. From a stock market point of view, what were you perhaps looking for? What were you expecting? I mean, it's the interim budget, so I'm sure the markets didn't have very high expectations of it one way or the other. But what do you make of it?
See, first, I think we were looking at the fiscal prudence, the fiscal deficit, which the markets were expecting to be between 5.3 to 5.5. I think there's a huge beat. She's announced 5.1, which is great. But I think there's still a risk of missing out on this, over the next 1 year, because it's much lower than what the market was expecting. So I think that risk is there. But then if you look at the capex spend, I think that is more or less in line with what the market was expecting, because we have seen huge increase in the last couple of years. That was because of COVID. We have seen a 32% CAGR. But this time it was expected to be about 12 to 13%. She's announced 11%, which is perfectly fine, because we are looking at the private sector spend, which has already started increasing. I think that should increase more. And clearly, I mean, the focus was expected to be on empowering the poor, youth, women and farmers. I mean, that's exactly what has happened. And you've had a number of sectors which has, in fact, been benefited because of the budget. I mean, you clearly have the farm sector benefited, rooftop solar, I think that's a clear focus area, tourism, railways, housing, as well as R&D. R&D, again, would be more on the defense side of it, which is good for that sector. So overall, from a market perspective, I think it's a very decent interim budget. But then we should remember that the market had already run up decently well. So because of which we are not seeing a further move post the announcement.
Right. So Amrish, from a point of view, somebody watching this, looking at the market, saying, okay, markets, as you said, have run up a little bit. What would you be doing right now? Buying, holding on, booking profits, selling and running for the hills? What would you be doing?
I think possibly the last option, because we've seen a stupendous rise in the market in the last close to 12 months. I mean, if you look at Y on Y, we are 24% up. If you look at the number of stocks which have become multi-baggers, I mean, 600 stocks have become multi-baggers. I mean, you have about 2,500 stocks being quoted on a regular basis. I'm not talking of penny stocks. 600 decent stocks have become multi-baggers. So when that happens, normally it happens.
All right, Amrish, I think we just lost your signal. Thanks a lot, however. I think we got the sense of what he wanted to say. Mukesh, sorry, you've been waiting patiently while we were talking to Amitabh Kant. Your sense of the budget, what you heard, and directionally going forward. You did hear some remarks about how they would like to have this low burden, low, ease of compliance, ease of paying taxes. That's the direction that we will see a lot of returns from. And that's what the numbers, quite frankly, are bearing out.
Yeah. For me, there were two key takeaways. One was fiscal prudence. And it's not just about figures, 5.8 going to 5.1 and 4.5. It's just the manner in which she's been able to achieve it, largely thanks to revenue mobilization and tax buoyancy. But I think that this period will stand out as a golden period in fiscal consolidation. Historically, fiscal consolidation was driven by curtailing revenue expenditure, curtailing expenditure, and at the cost of curtailing capital expenditure. So it's not just the percentage of capital expenditure in the overall expenditure basket of the government that has gone well, that Mr. Kant spoke about in terms of figures, but also there is reduction in pensions and interest payouts for borrowings from the market, coupled with revenue mobilization. I think that, 5 out of 6 budgets, she's kind of under-promised and over-delivered on tax collection. I think she's gained a lot of confidence in terms of what she has set out as a target. That also gives more confidence to the government from capex allocation standpoint. So I think this period will stand out, barring any black swan kind of external events. I think, her statement that India is going to experience a sustainable growth in the next 5 years, though political in some way, assumes significance. So this is one message. The second message is the new definition of FDI, first developed in India. I think this again goes back to lend thrust to Make in India and Atmanirbhar Bharat program, which hopefully combined with the global value chain that Vipin was speaking about in the morning, is leading us to a direction of what we will see in the Finance Bill 2 of July 2024.
Right, but the first part of what you said is actually very striking because as you are saying, a lot of good things have happened. You're spending on capital, you're building infrastructure, you're therefore building assets for the country, and despite that, you are being able to bring your fiscal deficit down a certain amount. It also means that whatever you've done with tax buoyancy is good. So the numbers are moving in the right direction. It's not that you're cutting off capital spending.
Correct.
To be able to achieve
so
the
if you look at the Fiscal Responsibility and Budget Management Act of 2004, just before the financial crisis, we were best insofar as the actual figure of fiscal deficit and revenue deficit was. But the quality of spending was not as good. So I think the golden period that I'm talking about is her quality of spending that has assumed momentum. You see, you cannot curtail capex now anymore. Somebody was talking about it in the other panel. Don't you think 10% is less? Well, I think 10% is very good if you look at the base and the impact that is likely to create. But then we still need to see that in Finance Bill 2, whether she actually takes up the capital base.
You're also assuming, as she did, that she's going to be back delivering the budget in July. So we'll have to see how it all pans out. But I think, yes, credit for, for some of the ways in which she's actually managed the numbers. Your sense, now that we've heard the interim budget, really short speech, 1 hour, much smaller than everyone was expecting. What was your sense of it?
I think it's a very confident government. I mean, the confident government in delivering and taking on some hard numbers. So I'll just pick up one on what Amitabh Kant said, that the action is in the states and states have to reform. And I mentioned before, states need to have their visions also set for a Viksit Bharat. Incentivizing state through linking financial deliveries with states will enhance their own reform program. Also want to take on from what Mukesh said, actually very confident of the revenue boosts that she is planning to be able to say, I'll increase capital capex by 11% but also deliver 5.1%. Now, nobody really, I think, was talking of 5.1%. It was 5.3, 5.4, 50 basis points adequate. It's more than 50 basis points.
Yeah, I would love to see how those numbers actually pan out. So we'll have to see. Rajan Navani now joining us. Just wanted to get your sense, Mr. Navani, of the interim budget. Final thoughts from everybody on what we make of it and till we wait for the full budget in July.
No, I think my thoughts are very similar to what has been discussed so far. I think, the good part about this budget is built upon the foundations of previous budgets, still demonstrating great fiscal prudence, as most people have said, and focusing on, increasing capital expenditure and also the areas that are of immediate need for a country like India. But one thing, Vikram, that stands out for me particularly is that, 1 lakh crore corpus, which is going to go towards, long-term at zero cost or very low interest for the building the research ecosystem, technology, innovation ecosystem for India. Because I think the good part about the way this is panning out is that, the government itself is a great customer of innovation. Looking at the investment that's happening in digital public infrastructure, today India has honestly been able to demonstrate to the world, the low cost at which it could build UPI transactions, etc. 45% of the world transactions happen here. And as this digital public infrastructure goes into agriculture, goes into healthcare and many other areas, I think the opportunity for Indian entrepreneurs and businesses to create, a product-led innovation ecosystems around the world will become much larger as these systems will get deployed largely in Global South, where price performance will always be a very big driver. So to me, the excitement is, India started its journey as Startup India, moved to Scale Up India, and now to a Research First India. I think that could be a great way for multiple stakeholders to come together to make investing in research as cool as investing in startups, because that's the layer that needs to get strengthened for India to position itself, on a global stage as it comes over the next 25 years in the Amrit Kaal. So to me, I think directionally, the budget, focus on technology, focus on key issues, whether it's women and children together, the youth, along with investments in the right level of infrastructure is a big plus for this budget.